Hi, everyone. Thank you for joining us on the Vidrio webinar today titled Discovering the Influences of Data Anomalies on Investor Portfolios and the Tactics to Conquer Them. This is Vidrio's first webinar in a future line of webinar updates that are formulated to assist institutional investors in solving the challenges they experience in complex portfolios today. We hope that you're able to join us on future entries into the series, so certainly be on the lookout for those over the next few months. And be sure to check us out always on vidrio.com for more thought leadership podcasts, research, and just a general of how we're helping to innovate and scale allocator operations today. Now, a little housekeeping note, if you're experiencing any technical issues throughout the webinar, please note that this could be due to the web-based platform that we're currently using. We are recording this entire webinar and will send the on-demand version out to registrants 48 to 72 hours following the live event. Should any issue occur, please try reloading the window and logging back into the webcast. If that still doesn't solve the issue, please use the chat Q&A box to let us know of your issue, and we will follow up once the session concludes. And then a little legalese. Lastly, please note that the information covered and posted in this webinar represents the views and opinions of the guest and does not necessarily represent the views or opinions of Vidrio Financial. This content has been made available for information and educational purposes only. The content is not intended to be a substitute for professional investing advice. Of course, always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding the investment planning. Okay. But before we get into today's webinar, I'd like to introduce you to our speaker and the guide for the next 30 to 40 minutes in our search to discover these influences of data anomalies on investor portfolios and the tactics to conquer them. And to that, I bid welcome to Zac.
Thanks, Dave. Appreciate it. As a quick introduction, my name is Zac Corona. I am a sales director here at Vidrio Financial. I've been here for about 3 years. And then before that, I actually worked at a Preqin, which, if you're not familiar, is a data provider specialized in the alternative space. And then prior to that, I also worked for a company called CoStar, which is also a data provider that specializes in commercial real estate. So I've always had a big focus on investment data so far in my career. So I'm really excited to be here and talk with you today, regarding some of the trends that we're seeing and some of the findings that we're uncovering.
Awesome. Thank you again for being here.
Of course.
Myself, I'm David Barry. I'm the marketing director here at Vidrio Financial. Prior to this experience, I worked at a company called Informa. They have a bunch of different brands under their umbrella, but I was associated with the wealthmanagement.com brand, handling product marketing, podcasting, and a whole lot more. For today, however, I'll be putting on the moderator hat and discussing growing data management concerns with Zac, of course, and some of the points that we'll be covering in this just to set the framework and the guide. Point number one, why data quality and timeliness is critical to investment performance and reporting. Point number two, the idea and the benefits of having a full data transparency framework across the organization to reduce data anomalies. And the final point that we want to get into, of course, you can't go anywhere without hearing about artificial intelligence or AI, is this concept of AI and machine learning and how that can play a role in advancing your data strategy. So, just to jump in here, now that we've set the stage for today's discussion, let's kick things off with the first question that we have as to why allocators are making such a big push towards data management controls in 2024. So take it away, Zac.
Yeah. Thank you. Yeah, for starters, I think it makes sense to talk a little bit about, and share why efficient data management strategies are just beneficial in general. Data is a pretty general term these days, but, only because it refers to so many different things. At this point in time, there's literally data on, anything and everything. And the question really is, how do we qualify that data to utilize it to make better informed decisions? And the first step of that process, is really having a clean and efficient way to collect all the data and then get the relevant data separated from the noise as quickly as possible. And that basically, in a nutshell, is data management. When you have good data management processes, you'll be a lot more informed on your portfolio and the positions that you hold. You'll uncover a lot more things that you may not have known prior, and you'll be able to identify trends much easier. And ultimately, the goal is obviously to make more informed investment decisions on a much quicker basis than before.
Yeah, and you raise a good point. Like it's the separation of that noise that's important in data management, right? I mean, just in my kind of my own travels here, I mean, you could really hurt yourself and the investment organization or team moving forward in this garbage in, garbage out approach or
Absolutely.
scenario. And because it's relied on with a level of believability that you have accurate data controls in place. But
Mhm.
if your data is off by even, a couple of, metrics, that could really screw up the truth in those data, correct?
100%. There's a tremendous amount of noise to sift through, and that varies by firm for sure.
Mm.
Some allocators will look at certain data points that others might deem as noise, or vice versa. So as an allocator, it's really up to you to kind of determine the data points that are relevant to you, and then separate those from the rest. You also just brought up a really good point on the garbage in, garbage out scenario,
Right.
which brings up another great emphasis on data management, and that's the point of verification within the process. So having checks in place to make sure your data is clean and accurate is really insanely important. As you just mentioned, in the worst possible scenario, really is to make investment decisions based on data that maybe later you find out has been inaccurate.
That makes a lot of sense. And, why specifically do you think here now, we're, 3 months, going into 3 months in 2024, there's such an
Yeah,
emphasis on data management versus 2022, prior to the
totally.
pandemic, even inside the pandemic? It's always been important in my eyes.
Yeah. Yeah, I think in terms of why now, I think that there's a combination of a lot of different factors at play. I think having accurate data and good data management has always been important to a lot of allocators in the industry. But really
Mhm.
up to this point, the issue has been with what is available and how easy is it to obtain. General partners and hedge fund managers have had direct access to their holdings performance data through various reports and things like cash flow statements,
Right.
but allocators haven't really had that same access. Obviously there's probably some high ticket allocators who have been receiving phenomenal reporting, but for a lot of those smaller players in an industry, reporting has been pretty scarce. So a large reason for this is because it does add another task for the GPs to be responsible for, especially when we're talking about some specific asset classes that reporting isn't as straightforward. But we are seeing a continuous changes in regulation, for example, that are focused on reporting on these types of vehicles, which is basically in turn pushing managers to have to put together periodic reports, regardless if it's requested by the investors or not. And so as one point, it's leading to a big group of these allocators now receiving reporting that maybe they didn't receive in years prior.
So this is definitely becoming more of a process, would you say, of leveling the playing field on the data that they
Mhm.
are receiving, regardless of the investor size, right? So
Yeah,
it seems to me it's definitely good news for allocators all around.
yeah,
So
100%. 100%. So, and I think those regulation changes are focused on leveling the playing field for a lot of reasons. Another big reason is that obviously 2024, it's a big focus, is the amount of industry data that's available now. There's so many companies that are providing data specific to asset classes, industries, or even like geographical focuses, and they're providing great data on things like performance trends, outlooks, general news, and a lot more. So again, at the current time, allocators have access to more data than really they've ever had before. And then the last point I'll bring up, and you mentioned just a little bit earlier, something we cannot avoid, but and probably one of the biggest factors of many others, is that presence of AI and machine learning. There's absolutely an idea of too much data, or even the saying that we're all familiar with, which is paralysis by analysis, which it refers to having too much information to sort through before
mhm.
making informed decisions. Luckily with machine learning, we can do things like create tools to file, scan, scrape relevant data from documents, which removes that manual process of basically having to scan through every document that comes through your door. And then, additionally with machine learning and AI, now we can produce reports from that data at different levels and on more of a bespoke basis without that manual process. So I think to summarize kind of on those 3 points, I think the industry has been becoming more and more data focused over the past decade. And we've gotten to this point now where, maybe we actually have too much data to sort through, which for your question, is why data management is having such a big push right now and why it's so important. And with the advancements in AI and machine learning, data management is really easier than it's ever been before.
Yeah, really tremendous insight right there. I mean, I think for those that are watching this today, or even through the on-demand version, the takeaways that we many should be taking away at this stage of the webinars. Really, do I have a garbage in, garbage out scenario in terms of my own data that I'm currently ingesting or making future decisions on? And then, of course, how quickly is the field leveling for my organization? Like, am I getting those opportunities against the bigger shops to get more quality data, more accurate data, so I can actually compete? Because with that data accuracy, it's huge for the business that we're in. We're definitely going to touch on AI throughout this webinar, so I'm glad that you brought that up. That's a huge point as well. You can't go anywhere without hearing about AI and deeper networks and learning networks and what have you. So I
Yeah.
know, just shifting gears for a second, because we've heard obviously portfolios are becoming more complex. Allocators are looking for or creative ways to generate alpha. Do you see any differences either in the approach or the risk management of the data as it relates to either a public or private market allocation or scenario? And so,
Definitely.
just to kind of clarify, as an example, many allocators are now looking at private credit. They're rushing into this. We're getting asked a lot of questions from a company perspective. What's our thoughts on private credit? The market's close to $1.5 trillion. With that kind of number, even a piece of the overall pie, the data has to be accurate, because if the overall pie is wrong in any way, so is the little piece that you're going to carve out for your own management processes. Would love
Yep.
to get your thoughts on, that, private versus public, market allocations there.
Definitely. Definitely. Um, yeah, I think complexity in portfolios is probably one of the biggest obstacles that data management faces. Obviously, with public market investments, whether it's direct or through a fund structured vehicle, reporting data comes more often and more accurately. With direct public positions, allocators can see on a live timeline what their performance looks like. Or for hedge fund allocators, they're typically receiving periodic estimates and then final performance numbers on a monthly basis. But with private markets, it really brings forward an entirely new issue because it's a completely different structure of vehicle. The assets are different, the reporting metrics are different. These are typically close-ended funds with different fee structures. And with the life cycle of a private capital fund, you aren't really looking at a linear performance curve. You're looking at more of a J curve.
J curve.
Um, and then on top of all that, reporting is done on a quarterly basis. So all in all, private market reporting is much tougher than public market, and there just really isn't as much of it that exists in the industry up to this point.
Yeah, and you said some good stuff there, because I want to unpack like the reporting metrics a bit.
Yeah,
You and I both know that we've got a few adjunct graduate professors here at Vidrio that are
yeah,
not only donating their time but their expertise to the next generation of allocators, and that are coming up through various college programs. So,
mhm,
speaking to those future executives, what are some of the reporting metrics that are crucial to have as part of a solid data management program as it relates to those private markets? I know
yeah.
Vidrio tracks a ton of this information, but is there anything that you can point to that's like most critical for private market allocators today?
Yeah, that's a great question. I think honestly, right now we're still kind of continuing to understand what metrics are most important for private market investments, Obviously it'll vary by investor.
Mhm.
Traditionally, I would say allocators didn't care as much about private market reporting because with the structures of the fund, you're locked into that fund until the end of its life cycle, kind of no matter what. So
Mhm.
spending time and effort on, understanding things like exposure and risk in privates didn't really provide a tremendous amount of benefit because you're still stuck in the investment. Excuse me. So basically, many allocators would just kind of look at, the managers and their track records and fund terms, and it was kind of more of just like a trust and go approach. But however, today secondary markets are more popular than they've ever been before, and this means that understanding your private market investments is obviously becoming more and more important because it's easier to get out of certain positions. So for specific metrics, it's obviously important to understand the fund and the fund focus and do due diligence on the managers, but ongoing monitoring of these managers is also extremely important.
Mhm. Mhm.
Understanding the funds or the holdings within the funds and what you have exposure to, where there's risk, and even more specific and topical, we can see things, are these managers following their thesis, or is there style drift present in their investment strategy? Those are the things that have not typically been accessible in the past, but we're
Hmm.
seeing them become more and more prevalent. And I think, between public and private, obviously there's some differences, but most diversified investors will have a combination of different assets and different asset classes, along with many others in their portfolio. And the more complex or more diverse, those positions are, the more data and the more variations of data you're going to be receiving. So yes, there are absolutely differences in approaches between public and private market reporting. Privates again, has not traditionally been as accessible than public, and I wouldn't say it's necessarily inaccurate or anything like that. It's just a little bit different on the private side, and with that in mind, I would say complex multi-asset class portfolios face
Mhm.
the biggest obstacles, just given the diversity of data that they're receiving. Since it's such a wide variety of both different managers and different asset types. So basically, you kind of need a system or a team that is informed in all different asset classes or specialized in specific ones, so that you can scan through each document and data point and really understand and recognize what's most important between those.
That's super interesting. I mean, I think, you know, just the private markets alone is just there's unstructured data there. There's a
Mhm.
lot more that's kind of you need more oversight on and more due diligence in. So it's super helpful that you outline that for sure. Shifting gears a little bit because there's another concept that we want to make the time for in this whole webinar. Since we've joined Vidrio, we've heard a lot about the concept of data transparency as it
Mhm.
relates to data pipelines and the data that's shared internally between different investment teams and
Yeah.
how it can be, kind of an obstacle with allocators, that transparency theme. Here at Vidrio, just the translation of our name, Vidrio, from Spanish to English defines the term as glass. So we're
Mhm.
really showcasing the level of transparency and that transparency theme that's critical for the importance of the industry that we deal with as a whole. So, given that concept, where do you see data transparency kind of going off the rails today for allocators? Like, why might they be dragging their feet? And more importantly, how can investors today put safeguards in place so that their transparency levels are to the highest degree and really not forming into a risk category, if you will?
Yeah, absolutely. Similarly, I think transparency can also be a pretty broad term,
True.
and relate to a lot of different aspects of the data cycle. But I think one of the biggest obstacles that people face is being able to see through the data and then communicate those findings. I mean, yes, it's fairly easy to look at one manager statement and understand how a fund is performing, or look at the stock prices and and see what your return is. But when you receive 200 manager statements and have a whole portfolio of diversified assets, how do you compile that data? How do you understand it? And then how do you communicate it with your teams? It's really not the easiest task in the world. And so having systems and processes in place that, can scale efficiently is really the key to being able to scale the business as a whole. And I think when talking about scalability, you really want to limit the amount of manual efforts that are needed to function.
Right.
So, for example, if you have an allocator with 65 positions and a pretty well-oiled data management machine,
Mhm.
what happens when you double the amount of investments? Suddenly you have 130 positions, and now you're possibly receiving, thousands of documents per year. Can your system, the same system, can it handle that increase? Or do you
Mhm.
have to hire, people to account for that increase? Is there now like a larger lag time because there's more data to sift through? These are all important questions to ask when thinking about transparency.
For sure.
Um, and also, I think transparency doesn't just relate to, viewing that data directly, but more relates to, how many things have to happen before teams are able to kind of read through the data and gain actual insight from it.
Yeah, I like how you changed kind of did the guidance on that question, because I think it drives the point home, right? In what happens when an organization starts to scale in this business. I mean, we've seen it all the time. We go from a manageable amount of positions to something that starts to strain the bandwidth and of the organization as a whole. From my side, I've always wondered about, and you touch on this point, the human element. Like each
Mhm.
week, you have these various news publications coming out with the latest people moves within institutional investing, and with all
Yeah,
of these moves, there has to be some sort of knowledge transfer in order to maintain that high degree of transparency, the high degree of intelligence inside the organization, right?
yeah,
Last week, we had two new New York CIOs, one for J. Paul Getty Trust and the other one for the
yeah,
Carnegie Corporation.
right.
So, in this next question setup, I'd like to get your thoughts on that aspect as well. As my observation is, when you have a platform solution in place, such as Vidrio, you can kind of offset some of that risk. And when people move out of the organization, the knowledge kind of stays in the platform and isn't as risky as, say, a person that had just an Excel spreadsheet knowledge, or Excel was your go to platform. And that
Right.
person leaves with that knowledge. And then you're locked into, like, oh, what's the password that they used, or where did they put it in the
Totally.
file folder system? Am I kind of correct or going off on a
Absolutely.
tangent? So, I'd love to get your thoughts.
Yeah, yeah, you're completely correct in that observation, and we see this a lot on our side. A
Hmm.
firm that has basically had one champion who controls their mess of Excel spreadsheets, or
Right.
or manages a team that controls the data management process. And basically, when that person leaves, the firm is kind of in shambles on how to operate and manage these spreadsheets, or manage these teams if a proper handoff wasn't really executed.
Right.
As you mentioned, you can avoid this very easily by having an automated process that, no matter who is operating it, it will give you the exact same output that you received previously. So Vidrio is a great example of that, utilizing automation to kind of avoid some of those different risks. And then, to expand on the point I made earlier about gaining actual insight from the data, the other side of the data pipeline is, now that we have sourced and scraped the data, what does it mean? And basically, how are we utilizing it? A massive Excel file of raw data points can really only tell us so much. So we have to have, additional processes in place as well to, basically enrich that data with things like performance, exposure, and risk. So again, we have to have, a solution that basically can quickly and efficiently ingest data, and it has to be able to handle an increase in the amount of data ingested with no issues. And then it has to scrape the relevant data, and then enrich that data with value add metrics, so your key decision makers can limit the amount of time they're spending on dissecting or reading through reports, and then they can make more informed investment decisions more quickly, which is kind of what we mentioned at the beginning.
Got it. Got it. So, ingesting is critical, enriching is critical, scraping that data. filtering out that noise. Certainly a lot of points that allocators need to sort through to really get that data
Absolutely.
strategy under control. Switching gears a bit, and I know this comes to a really passionate point of the webinar, is the concept of AI. Over the last several months, through our own podcasting efforts, blog entries, or even client updates, this concept of generative AI has become a larger part of institutional investing. You can't go anywhere without
Yeah.
hearing about it or seeing it. And even in our last blog, we went to the Pension Bridge European event. We heard many event attendees struggling to define, what that use case is for AI and deeper learning networks and what have you. And more importantly, whether they build an AI model themselves or just simply outsource it to someone like Vidrio. What do you believe the right answer for the future is for this? Outsourcing versus, building it internally? Any thoughts there?
Right. Yeah, 100%. Great question. I think this answer definitely varies by firm, and I'll
Hmm.
I'll try and take my undying bias for Vidrio out of the equation for a moment.
Of course.
Um, and I'm obviously not the biggest AI expert, but I do understand the in-house versus outsourcing aspects of it, which I'll talk on. I think some of the much larger firms in the industry have resources to create their own AI models or hire a team to manually manage their data. Do I think that that's the right thing to do? I would probably argue no,
Hmm.
just because there's still firms out there that are doing it better and cheaper. But if you don't lack an abundance of time and money, having an internally built system or process, it does allow for more flexibility than some of the other solutions in the industry, and possibly a little bit more control as well. But however, I do believe that most firms in the industry do cherish those resources of time and money,
For sure.
as you can imagine.
Yep.
So I do think outsourcing is probably the way to go for a number of different reasons. Some that I listed here on the screen, but I think the largest, which we were just talking about, is really just the cost of building something in house. Not only from an actual money perspective, but also from a time perspective as well.
Hmm.
Not many firms already have data scientists or engineers on staff. So your first step is really finding a team that can handle that task and then employing them or contracting them. And then once they are employed, a solution doesn't just occur or is built overnight. It has to be built, it has to be tested over and over again to ensure not only is it working, but ensure it works efficiently with your team and how they operate. Can a system handle every single data management task that your team faces, or do you still have to purchase maybe an outside provider to handle some of the tasks that it doesn't handle? And then if the system does work properly, how long is it going to take to train your teams? Who's going to be training them? If it's your in-house solution, it's your responsibility to train your teams and make sure they're up to date and up to speed on how to operate the platform and the process as well.
Yeah, and I have to imagine, even when everything is is said and done, the I's are dotted, the T's are crossed. There's still a ton of work that needs to be done, correct, to get these kind of
Oh yeah.
internal systems up.
Yeah, 100%. Once you have that solution built, you also have to have an additional team that now manages that solution and can
Hmm.
make sure it's operating at all times. So, if the system goes down or operates improperly, giving you inaccurate data outputs, then you have an entirely new issue. Can your teams work without the system? How long will it take to get the system back up and running? Who is the IT team? Are they in house? Are you outsourcing the IT team? If the system is producing inaccuracies, how long have those occurred, or where are they? And then these are obviously small errors, but they can have some pretty drastic outcomes, on reporting or just day-to-day business in general, for sure. And then a couple other points too, as I mentioned earlier, if we just look at the past few years, the amount of data that is available has obviously increased significantly.
Sure.
the diversity of actual data sets, as well as simple characteristics like the format in which data is transmitted to folks has changed as well.
Mm,
So, with an internal system, you're the one in charge of changing your model and solution to kind of reflect the changes in the industry as well. And I can't really count how many firms we've spoken with over the years, that have gone through a process of building a solution, building something for years, and with all the constant kind of industry changes, those systems are now outdated and really just don't suffice for what they need, and they're too expensive to rebuild or to update. So now these companies are basically scrapping these entire projects and outsourcing to a company like Vidrio. So there's also this huge risk that at the end of all of your efforts, you'll have spent an enormous amount of time and money to build something that really just doesn't work for you or works for a limited period of time. And then you have to put in a bunch more money and time to update that particular process. And I think with outsourcing anything, you're taking a lot of that risk off the plate, and a lot of risks in general. Some risks can be more costly than others, but when it comes to things like AI models, machine learning tools, and manual labor efforts of data collection, these could be some pretty costly risks at the end of the day. So
hmm
in my mind, the amount of flexibility you have with an internal system doesn't really outweigh the cost or the risk of building and managing internally. And I think even just to combat the flexibility aspect as well, companies like Vidrio are working with many allocators all over the world that are constantly experiencing change. So
Right.
we have to be flexible to change our services to account for those changes as well. And the biggest takeaway in this is that's a risk that's being offloaded from the allocator and put onto Vidrio.
Really good point there. Yeah. I mean, I think to summarize, I mean, so better data, better time management when implemented correctly, it definitely has those cascading benefits across the investment organization. And I think everyone would agree that, it does take time. It's looking at, weighing those risks and seeing, where you want to go with it.
Yeah.
Um, it's interesting because I've done a little bit of research in the last few months on the topic of data management. Back in November, Michael Thrasher, which is one of our favorite journalists around here, an institutional investor, he reported on a State Street survey, and it was showing something mind blowing that not many institutional investors are really prioritizing an all encompassing data management approach. What do you think the issue here is, and maybe we've touched on it a little bit in what we've been talking about, but
Yeah.
it just appears that like they're dragging their feet a little bit when it comes to implementing that data. Any thoughts on
Right.
that?
Yeah, pretty amazing to me as well. There's so many things and changes that can be made, and some cheaper than others, and some smaller or bigger than others, that can improve your process. So definitely interesting and amazing to see people a little bit reluctant. But as with everything, I think that there's many reasons for people to be slow to adopt, a new technology or a new management solution or
Mm,
data management, for example. Um, the first I'd mention is probably just a lack of awareness in general. People aren't totally sure what's out there. They don't know what they don't know.
sure.
And as I mentioned earlier, it is a massive task to build something in house. And some investors may not realize that there's companies like Vidrio out there that they can outsource to.
Mm,
Um, and then another reason I would mention is probably like a reluctancy to change in general. And
okay.
some firms, have been operating the same way for so long that change is scary. And maybe they believe that, introducing new tools it will ultimately hurt or their current process, if it's not done properly, obviously. Or the idea that, again, people don't know what they don't know. So maybe they believe that, their current processes are efficient because they don't know, how much better their processes could be. And that's a pretty, sketchy place to be because you don't really know you have an issue until you have an issue, and you don't know how big that issue could be. So it's always good to, know what's out there and be aware of, your options like that as well.
Yeah, and you touched on a good point here, like this reluctancy to change. I want to unpack this a little bit because throughout all of our podcasts, we ask the question of, to all these allocators that we speak to, what are some of the red flags that you're dealing with that, if you took a data management audit, let's say, of your operational process,
Yeah.
what would signify a red flag to you? And I've heard a couple of things. I want to get your kind of take on it. One, I would distill down to a great reliance on Excel,
Hmm.
and feel free to agree or disagree on that,
Yeah.
obviously. The second one is kind of, being a single person or gatekeeper of all the knowledge that others would have to kind of go to seek out their approval on, to take an action on an allocation or something like that. And
Yeah.
then, given the growing portfolio complexity, and this is a really interesting one to me, there was a lack of internal knowledge. And specifically, we were coming across this when we were developing the OCIO report for Vidrio,
Yeah.
where anything new or emerging as far as an asset class, there could be an issue where teams are kind of holding on to more traditional or comfortable asset models, not going into more innovative strategies that might have greater risk reward scenarios, if you will.
Totally.
So I don't know if you have any thoughts there, from an Excel standpoint, red
Yeah.
flag, or,
Yeah. Yeah.
knowledge keeper, or even, lack of knowledge. So
Yeah.
I'll give you the floor.
Yeah. Yeah. No worries. Yeah. No. No. Great points in there as well. Firstly, those some of the ones you mentioned, those are pretty bright red flags for a
Yep.
firm's data process. I'd start with mentioning Excel is great.
Hmm.
We use Excel all the time. We'll probably never stop using it because it's so integral um, as a part of our business and our industry. But I will say, if you're a professional investment firm and you're managing your entire portfolio or all of your data through Excel, that is a mistake and that's just insane. Um, and as you mentioned as well, with these massive spreadsheets, there again is typically one or two people that have full control of the integrity of the model or the spreadsheets in general. And when those people leave, you're pretty much lost.
Hmm.
And the second point you brought up is, absolutely having a lack of knowledge in just asset classes in general can definitely play a factor as well. I mentioned earlier in the call, with complex portfolios, you really have to train your teams to understand or specialize in all of the asset classes. Otherwise, you are putting emphasis on certain assets and you are missing out on great opportunities there. Um, and then one just kind of theme too, I think when we're talking about Excel and lack of knowledge, for example, we're really only addressing like the consumption side of data. So I
Hmm.
think, the biggest thing to look at when auditing your data management process is, how much time, effort, and manual labor is actually being put in to be able to consume the data. So
Hmm.
how is your data going from, a simple document or simple data point to a fully enriched aggregated report? The goal obviously is to be as efficient as possible. And if your data collection and scraping processes are taking too much time, then you have an issue. And on the flip side, quickness is great, but you don't want to give up on quality either. So, if your data has to pass through multiple people or multiple teams, you need to ensure that there's no fat finger mistakes along the way, or that you're not feeding inaccurate data at the beginning.
Hmm.
So to answer your question, you want to have a solution that can basically quickly and efficiently gather and aggregate data with minimized manual processes while also still having a laser focus on accuracy. And up to this point, I think people have been very focused on, how they are consuming the data, through the interface or what it looks like, and less focused on, how they're obtaining the data. But I think we're seeing right now, a big transition in the industry to kind of make the obtainment process more efficient as well.
Yeah, that minimization of the manual efforts is really helpful. I think, I
Yeah.
think taking the risk off the plate is certainly well valued in the space that we find ourselves in today. I know, just kind of talking through more automation, more artificial intelligence models, that alone really isn't enough. The human expertise we're finding also isn't enough alone in its own silo. Blending the two, which is something of a differentiator, especially that like Vidrio looks at when they're taking both of those concepts, putting them together in terms of better data accuracy and speed,
Yeah.
seems to win out, especially when you're considering like a total portfolio view or solution.
Mhm.
Blending that human side with deeper machine learning and neural networks. I think it's a great segue into this next concept of uniform platform management. And this
Yep.
is something that I came across, and I'm sure you have in your own travels in one of the events that we attended last year. And what it essentially is it boils down to a standardized approach to managing institutional investment portfolios through efficiencies in time savings, risk management, client communication, regulatory concerns. There's definitely a lot to unpack. I'm not trying to minimize that here.
Yeah. Yeah.
Um, but I'm wondering, if you could kind of give us a little, kind of visualization, if you will, of how uniform platform management works,
Yeah.
for data management experts today.
Totally. Yeah, yeah, absolutely. Obviously a topic that I'm very passionate about, especially with consideration to our time here at Vidrio.
Sure.
But a uniform platform management solution or just the term in general can mean different things to different people, as with everything we've kind of talked about today.
Right.
But the way to look at it is, having a centralized single source of truth.
Hmm.
We've talked a lot about data management, the data management process, which is the process of obtaining the data. But now we can ask the question of, what are we doing with that data that we have obtained? And that part relates more to kind of the portfolio management side of things. So you have an efficient data management process, that is fueling your operations platform with accurate data. The issue that we see in the industry is that many firms data management processes and their operations platforms, aren't really the same, or don't communicate or integrate well with each other.
Hmm.
So, for example, what Vidrio brings to the table is an integrated data management and portfolio management solution. So, not only are we collecting data quickly, efficiently, and accurately, but we're also giving you the resources to kind of view performance, risk, and holdings, at the fund overall portfolio and the holdings level. You can benchmark against peer groups, against indexes. You can build and benchmark against model portfolios. You can view cash flows and cash flow forecasts, and plan and execute transactions and create workflows for trade process or due diligence periods. You can even manage the relationships with your investors through the platform. So, we're basically giving allocators a single tool that can kind of handle all of their data management and portfolio management needs. And that's really the game changer that we're seeing right now.
Wow. Wow. I mean, we could structure, it seems, a whole other webinar on data management part two, if you will. So, I might be calling you again for, part two in
100%.
in the fall. But definitely growing concern. I think before we even get into a part two, I wanted to ask you a bit more about the future of data management and controls. Always
Yeah.
kind of looking into the crystal ball, if you will. And I'll break down this next question into two parts. I think part one, what would be the top three items, trying to distill this for our webinar audience today, that an allocator looking to outsource a solution would want to consider for the future of their portfolio, right? So, you know, it could be, anything under the sun with what we've discussed. But I think that's part one. Part two,
Yeah.
Vidrio serves a lot of different allocators from asset management firms, family office, pensions, endowments, more. Is there a particular type of investor that you're seeing that has been more open to kind of the innovation, the streamlining of data management controls, and then being able to configure those controls for the future?
Yeah. Absolutely. I think to answer the first part of your question, for the top three things I'd recommend, the first is have it be Vidrio for sure.
Hmm.
Just kidding. But the top three, I'd point back to something I just mentioned a minute ago. But it's basically, you want a solution that is quick and efficient, which means you're receiving data in a timely manner.
Hmm.
You want a system that completely rids you of all or almost all manual task responsibilities.
Right.
And then you want a solution that feeds you accurate data. So there has to be checks in the system to process and ensure, those data points are accurate. And then, the outcome of that solution is you're going to be receiving accurate data quicker than ever with little to no manual effort. And with all the time that you're saving by adopting that solution, now your teams can focus on really what's most important, and that's finding alpha and making critical investment decisions. Um, and then to answer the second part of your question, to be honest, I don't really think that there is a specific group of allocators that are more open or are adopting it quicker than others. I
Hmm.
think firms that have more of a mess on their hands definitely have more of a need, which makes them a little bit more open. Um, and we see that a little bit more maybe on the asset management or firms that are managing multiple portfolios just because they have so much data coming in.
Right.
Typically, they'll have more clients, more positions, more funds they're managing, things like that. But the reality is, I think every single firm across the world could absolutely benefit from a solution like Vidrio, just
Hmm.
because for all the reasons that we mentioned, offloading risks, ridding yourself of manual tasks, and just being able to make better decisions, more informed and quicker than ever than you've ever been able to prior.
Great. No, I mean, it's a lot to unpack. I mean, I think we're just scratching the top of this iceberg, in terms of data management, the collection, the enrichment of that data. Certainly AI, like I said, it's a huge, conversation that's still being had today, and it will continue on for some time. Always do this at every webinar that I've ever been a part of is, do you think that there's anything that we didn't cover on here that you would like to, close out thoughts on at all?
No, nothing I think that we're missing. I think data management is obviously a very complex thing in its own. And I think, as you mentioned, we could have a webinar or a talk in general just on every single point that we made here today,
Mm,
just significantly more in depth. So, I could talk for hours on each point here,
yeah, for
which is
sure.
great because we've got a lot of time in front of us and a lot of webinars to plan. So,
Yeah.
exciting stuff.
Yeah, that's true, and it's a great point that Zach makes. So for all the listeners, both today and also on the on-demand version, be on the lookout for a full calendar for the rest of this year for our webinar series. We'll be approaching, obviously, thoughts on data management. You haven't heard the last of this topic, I'm sure, by any means. There'll be thoughts on AI and other allocator challenges that are out there as well for all the industries that we serve. But before we go, I want to thank Zac for his time today discussing not only the Vidrio platform, obviously, but the data management trends, the challenges, there's a lot of them, and the solutions that we're seeing. It's a lot of great insight for allocators to digest on how to stay on top of their data needs while managing time, speed, and accuracy, and a whole lot more. So we appreciate the challenges that you guys are going out there with, and certainly, look for us to partner with in the future. And again, this session has been recorded and we will share this out in the near future. So be on the lookout for that, as well as any additional webinars as we progress throughout the year. So thanks again, Zac, for your time. I appreciate it. And we'll be sure to talk soon.
Yeah, thanks, Dave, and just have my information on the screen as well. If there's obviously any questions or anything, please feel free to reach out to us.
Absolutely. Absolutely. Thanks again. Take care,
Thank
guys.
you. Bye.